In latest news with the broker wars, there is yet another acquisition occurring. Now, for the paranoid people out there, this is the biggest deal for a US bank since the 2008 financial crisis. And if you haven't seen my other videos yet covering some other acquisitions, I talk about Charles Schwab, TD Ameritrade, Robinhood. I'll link some videos down below, but of course don't watch those until you're done watching this video. It was announced last week that the massive company Morgan Stanley is acquiring the discount brokerage company E-Trade in a massive $13 billion deal.
Morgan Stanley is making headlines today by buying E-Trade for $13 billion, the biggest takeover by a major U.S. lender since the 2008 financial crisis. E-Trade shares are surging on the news. You can see they're up by about 24%. And Morgan Stanley stock slumping a bit, off by about 4%.
It's an all-stock deal, and before we get a little bit more further in depth, let's talk about the companies themselves. So we're going to be starting out with E-Trade. E-Trade and its subsidiaries provide financial services including brokerage and banking products. These services are offered to traders and investors alike. Stock plan administrators and registered investment advisors, or RIAs, are also offered these products. Recently, E-Trade made headlines by becoming one of the latest companies to slash all fees for investing and trading. And so it does not cost anything to actually trade stocks and options and different commodities and securities with their platform. So E-Trade makes money through their premium services and products and different kind of services that they offer. Upon announcing that they're slashing their trading fees, this was a massive loss in their total revenue, as it is a good chunk of it, but Morgan Stanley did find great value in the company still and decided to purchase it. Morgan Stanley is one of the largest and leading global financial services firms. They provide a wide range of wealth management, investment management services, securities, and banking. They have offices in 41 countries, and the firm serves clients all around the globe worldwide. Clients include governments, institutions, corporations, and even individuals. So Morgan Stanley will be paying just over 1.04 shares of their company for each E-Trade share that's acquired. Based on the February 19th closing price, this is $58.74. This deal will significantly increase the scale and breadth of Morgan Stanley's wealth management franchise. It will also position Morgan Stanley to be one of the wealth leaders across all channels and wealth segments. E-Trade has more than 5.2 million client accounts with more than $360 billion in retail client assets. This will add to Morgan Stanley's existing 3 million client relationships and a whopping $2.7 trillion in client assets. This deal will ultimately be expected to close in the fourth quarter of this year. More importantly, this will mark a continuation of Morgan Stanley's effort to do a rebalance of their portfolio of businesses. This will help a greater percentage of revenue and income derived from their balance sheet light. It will also bring more income in from more durable sources of revenue. Upon integration, the combined wealth and investment management businesses will contribute approximately 57% of the firm's pre-tax profits, excluding potential synergies, compared to only approximately 26% in 2010. E-Trade shares were halted upon the news pre-market after gaining 25%.
Transaction this
Looks
morning.
like E-Trade shares have been halted for news, if you take a look at this right now. So that was the activity that took place before those shares were halted.
Morgan Stanley shares fell 3.9%, but overall have gained about 33% over these last 12 months before the big market drop because of the coronavirus news. And if you haven't seen my video yet, where I talk about the coronavirus and how it will affect the economy, be sure that you click that link down below, but be sure that you watch this video first before looking at that video. The news prompted talk of Morgan Stanley's status as a systematically important financial institution. It is subject to Financial Stability Oversight Council rules. This was an entity that was established under the Dodd-Frank Wall Street Reform and Consumer Protection Act. The legislation was put in place to ultimately protect from another financial crisis that would threaten the health of the U.S. financial system. It sought to stop banks from growing too big to fail. President Trump in his presidency has rolled back some of those Dodd-Frank regulations, which has definitely raised some concerns. The concern is that this would cause banks to re-engage in risky behavior that required government bailouts in 2008 and 2009. Experts are saying this illustrates the powerful drive toward concentration of market power in the financial industry. And as I mentioned, this deal just comes on the heels months after the E-Trade rivals Charles Schwab and TD Ameritrade announced that they were forming a massive $26 billion merger. And that came just weeks after Schwab shook up the sector, announcing that it was slashing its trading fees to zero, which caused all these other companies to follow. Other discount brokerages immediately followed suit, and it also created speculation that after this deal, more deals would follow, being that these trading fees being slashed would cut into their revenue. Now, E-Trade manages stock awarded to employees in the form of options from employers. It strives to move over to brokerage accounts as soon as they vest. Analysts are also saying that it illustrates how much more lucrative it's becoming to manage ordinary people's money than it used to be. Technology now offers potentially limitless opportunities to access personal data and other resources. Scale and a related ability to run a major investment platform is quickly becoming the key ingredient to success in the asset management sector. Now, the chief executive of Morgan Stanley, James Gorman, has actually been interested in an E-Trade deal since 2002. This was while he was working at Merrill Lynch, and the executive reached out again in 2007. Talks broke down as E-Trade was grappling with a portfolio of home equity loans that were souring, and talks were finally revived again in December following the TD Ameritrade and Charles Schwab merger. So the combined platforms will now have $3.1 trillion in client assets, as well as $8.2 million in retail client relationships and accounts. In addition, there'll now be a combination of $4.6 million in stock plan participants. So the combination will definitely increase wealth management scale, but it'll also fill products and services gaps through complementary offerings. It will also enhance digital capabilities and make Morgan Stanley the leader across all three channels. They will now be a top player in the financial advisory, workplace, and self-directed sectors. The significant cost and funding synergies will result in stronger financial performance and shareholder value creation. So just in the last year, if you look at it, there's been some major financial news and market mergers and brokerage wars, and it'll be very interesting to see what happens next. Now, law officials are saying that this is definitely breaking some monopoly and trust regulation laws, and there'll definitely have to be some action taken to combat this. I'm curious to know what brokerage platform that you're using. Which one do you like the best? Tell me in the comments, leave a comment down below. Hope you enjoyed that video. If you did, be sure to give it a big thumbs up, smash that like button, and if you'd like to see more videos from my channel, I post videos every single week covering business, finance, entrepreneurship, mindset, strategy, and tips and tricks from my own experience. Be sure that you subscribe. I post videos every single week without fail. And if you'd like to be first in line to see that video before anyone else, be sure that you hit that little notification bell as well, so that we're notified every time I make a new one. See you in the next video.